I get a little bit worried. And
This is the warning the billionaire investor Warren Buffett gave in his recent meeting with investors and media. The consequences he is talking about will not only affect big companies, but everyday people like you and I. Just imagine a world where most investments are at risks, jobs are beginning to disappear, and the very foundation of real estate market is shaking. This is the world we live in now, and just a few consequences Warren Buffett discussed in this meeting. With invention of AI, the Bitcoin halving event nearing, and commercial real estate being under 1.2 trillion debt, the investing landscape has never been more dangerous. It's especially true for average investors who are most vulnerable to these tragic changes. With AI set to impact job security, not only will people lose their investments, but they may also be out of jobs as well. And here's what Warren Buffett had to say about AI.
I mean, it can do all kinds of things. And when something can do all kinds of things, I get a little bit worried. Because I know we won't be able to uninvent it. And, we did invent, for very, very good reason.
AI, or artificial intelligence. It's a term we often hear, but what does it really mean for our jobs and the future? Well, according to the Pew Research Center, 19% of American workers in 2022 are in the jobs the most exposed to AI, in which the most important activities could be either replaced or assisted by AI. That's nearly 32 million out of 168 million workers currently employed in the US that could be out of job in the next decade. When it comes to global impact, a recent Goldman Sachs study dropped a bombshell that AI might disrupt a whopping 300 million jobs globally. Why should you care? Well, it might just be your job that gets replaced. The jobs highest at risk include tech, from coders to data analysts, media professionals including advertisers and journalists. The legal world isn't safe either, especially for paralegals. Market researchers, teachers, and Wall Street traders also need to brace themselves. And these are just few careers that AI is set to replace. This is because AI is revolutionizing almost every field. Take stock investing as an example. AI can analyze data better, be better at trading, offer and improve fraud detection and risk management, and provide access to advanced investment strategies to people like you and I that are currently only accessible to institutional investors. This is clearly a game changer and why many people are so worried about their potential future. Practically any job with repetitive tasks and data analysis will be replaced or automated in the near future. Buffett acknowledges the rapid advancements of AI, from self-driving cars to chatbots. He is also partially skeptical about the excessive hype. While robots may take over factories, Buffett believes that there is still a place for good old-fashioned human intelligence.
It can change everything in the world except how men think and behave. And that's a big step to take.
After all, can a robot understand humor and feel empathy? As Buffett emphasizes, it's crucial to consider the broader effect of AI on industries rather than getting caught up in the latest trends. It's not all doom and gloom. Experts also believe that while AI is likely to take away 85 million jobs globally by 2025, it will also generate about 97 million new jobs by 2025. The only issue is that people may not have the skills required to do those new jobs. While AI may replace a lot of jobs, it's still expected to deliver an additional 16% higher cumulative GDP by 2030. This amounts to 1.2% additional GDP growth per year worldwide, mainly coming from labor substitution and increased innovation in products and services. So what's the bottom line? AI is here to stay, and it's changing the world as we know it. But it's also only one part of the economic storm brewing today. Speculation is also on the rise. Here's what Warren Buffett had to say about speculation.
Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, they have the same people.
In the world of investments, there's a fine line between speculation and actual investing. And in recent years, no other asset has blurred this line more than cryptocurrencies. Buffett, known for his long-term investment philosophy, has always been hesitant of speculative bubbles. And with the crypto world buzzing about next Bitcoin halvings in April of 2024 and the rise of altcoins, it's important to understand the difference between speculation and investing. Historically, Bitcoin has seen significant price movements around its halving events. For those who are not familiar, Bitcoin halving is when the reward for mining new blocks is halved, effectively reducing the new supply of Bitcoin entering the market. What it does is it helps fight inflation by maintaining the cryptocurrency's scarcity, potentially driving its price up if the demand remains consistent. But here's where Buffett's wisdom come into play. With new altcoins emerging post-halving, Many might be tempted to jump on the bandwagon, hoping for quick gains. But as history has shown, not all that glitters is gold. Chances are the average investor will get burned and lose money on these speculative bets. Why? Because they're not made on sound business practices. It's all speculation and gambling, whereas long-term investing is based on growth and value investment brings to the world. Just take, for example, how Berkshire reinvests its profits into business rather than paying out dividends. These retained earnings contribute to higher earnings in the future by allowing Berkshire Hathaway to reinvest its profits into more businesses and thus increase their stock value over time. This strategy is an alternative to dividend investing because it benefits shareholders through capital appreciation. Buffett's advice is always to think long-term, understand the asset, its fundamentals, and its potential, which brings us to commercial real estate. There's a reason why Warren Buffett has stayed away from commercial real estate investing. Here's Charlie Munger's and Warren Buffett's take on it.
But I do think that the hollowing out of the downtowns in the United States and elsewhere in the world is going to be quite significant and quite unpleasant. I think the country will get through it all right, but as they say, it will often involve a different set of owners.
Yeah, and the buildings don't go away, but
the owners do.
Towering skyscrapers, busy office spaces, and thriving businesses. This has been the image of commercial real estate for decades. But as we continue through 2023, ever since the pandemic, the landscape has shifted, and not in a good way. With his expert eye for economic trends, Warren Buffett has hinted at the dangers lurking in the commercial real estate sector. But what's causing this shift? Well, according to a report by Fortune, the value of distressed commercial real estate soared to a staggering $80 billion in Q3 of 2023. That's the highest it's been in a decade. Well, for one, rising interest rates and vacancies resulting from work-from-home culture. This culture has led many companies to downsize their office space or get rid of it altogether, thus decreasing demand and crushing profits for investors. Now, you might be wondering, why should I care about big investors facing losses? Well, it doesn't just affect big players. Many retirees and soon-to-be retirees have self-directed IRAs or simply cash that they invested in syndication and REITs. REIT is basically a security that trades like a stock that's backed up by some income-producing real estate. But with current state of commercial real estate and potential bankruptcy for high number of properties, people stand a chance to lose if not all of their retirement money, but at least a significant chunk of it. Regular investors should also be cautious about excessive borrowing, potentially over-leveraging themselves with investing in real estate, as market conditions can change, impacting the ability to service the loan. So what's the way forward? Diversification. As Buffett often emphasizes, it's crucial to diversify investments and not put all eggs into one basket. With commercial real estate sector facing tough times, it might be time for investors to rethink their strategies and ensure that they're not invested in just one asset class. Among all this uncertainty, one thing remains clear: knowledge is power. By investing in your knowledge, staying informed, and making wise investment choices, you can navigate this downturn and keep your head above the water.